Hello, everyone. This is Jamiah, the agent here with Keller Wiliams Realty, and I'm here with Rosa Reyes of Home Team Lending in DeLand, Florida. We're here to go over the first-time home buyer process, educate you guys a little bit. So go ahead and get your pens and papers out. Get ready to take some notes. Um, it's going to be a lot of great content here, and we're excited to share with you guys. So I'm going to pass it over to Rosa now. And Rosa, you have the floor.
So we understand that the home buying process is expensive and it may seem a little complicated, but we are here to make the process a little bit less complicated for you. Okay, so a first-time home buyer's guide to mortgages, brought to you by Home Team Lending. All right, mortgages are as easy as 1, 2, 3. 1, pre-qualification. 2, pre-approval. 3, contract and loan application. So, do you have a little bit of work to do? If your credit is below a 620, we will actually provide a free credit report and give you a mortgage plan. So whether it's to pay down debt, negotiating payoffs for collections, or even establishing a secured credit card. Pre-qualification versus pre-approval. Pre-qualification is based on verbal information provided to the loan officer. It is not a firm commitment. Pre-approval, however, is based on verified credit, income, debts, and assets, a firm commitment from a lender for a specific loan amount. Pre-approvals are very important to get from your lender if you are interested in buying a home. And I would suggest to get pre-approved before actually going house hunting. It will actually show that you are a serious buyer. And if you want to put an offer on a home, they would like to see a pre-approval letter. So there are 4 pillars of a mortgage, 1 being the credit, 2, debt to income ratio, 3, work history, and 4, assets. We hope that you have all 4 pillars. However, if you have 3 out of the 4, we can possibly make something work. So the documents that you need for a loan pre-approval, 1, a new credit report. Credit reports are good for 90 days. 2 months of pay stubs, 2 months of bank statements, 2 years tax returns and W-2s, or W-2s, depending on your situation. We don't necessarily need a driver's license or social security card. We would like the awards letter for retirement or disability, and then 24 months of work history with start and stop dates. And if you are going to use assets from your 401k, IRA, and annuities for your down payment or your closing costs, we will need quarterly statements. Credit Karma. So often I have clients have an idea of what their credit scores are after going on creditkarma.com. However, Credit Karma does not give you your credit score, your accurate credit score. There are many cases where Credit Karma actually gives you a score of over 100 points above your actual credit score. So it is not accurate. It's very important that you work with a lender and they will pull your credit and give you accurate credit score. So minimum FICO scores to qualify. These are minimums before the COVID-19. Things have changed a little bit due to COVID. So at this point, for an FHA, VA, down payment assistance program, conventional, you are going to need a 620. We believe that we are going to go back to a minimum credit score of 500 again in the near future. We just don't know when that's going to be quite yet. And then you will need a 640 or above for a USDA loan. However, for both the down payment assistance program and the USDA loan, there are income limits. In the USDA loan, the home must be in the USDA designated area. All right, improving your credit scores. So maintain balances at 25% or less of your credit limit. Make all payments on time. Is actually 35% of your score. Do not co-sign on any car loans or credit cards. Do not close old credit cards. Do not open new credit cards. And do not apply for any new credit during the home buying process. That will absolutely ruin your chances of getting a home loan. In some cases. Income. You must have a minimum of 2-year income history, base hourly pay or base salary, overtime averaged over 2 years, child support and alimony payment have to actually continue for 3 years. So that is very important. Social Security, retirement, disabilities, income as well has to continue for a certain amount of time after you have applied for a mortgage. So debt to income ratio, DTI. So 25% front end, typically what is a safe space for your housing payment. The back end includes your housing payment and any liabilities on your credit report. So a back end of 40% would be the most perfect situation. However, other loans require different DTIs. So USDA, front end 32%, back end 44%. DPA, 32% front end, back end 50%. VA, FHA, max is 35% and back end is 58%. Conventional is 35% front end, back end 50%. All right, types of loans. Conventional, typical minimum payment for a down payment is 5%, but there are programs out there that will allow you to do 3%, such as the Home Ready program. Conventional can be used for your second home, investment home, vacation home. Higher credit scores are typically needed. However, during the COVID regulations, 620 is the minimum for a conventional and for other government programs at the moment. So the private mortgage insurance drops off when you have about 20% equity in the home. And then the max loan amount is $510,400. FHA, 3.5% down. Must occupy the home as primary residence. PMI runs for the life of the loan. Lower credit score is okay. Again, before the COVID regulations, we were able to close deals at 500. Max loan amount is $331,000, and it's actually based on the county. VA. So if you served in active duty reserve, or maybe even if your spouse served in the military, you will qualify for a VA loan. So no private mortgage insurance. Funding fee rolled into the loan. No funding fee with at least 10% service-related disability. And the max loan amount is $510,000 unless first use of entitlement. Funding fee for VA loans. There you go. that's one that like you can look at and then write it down.
Right.
Okay, types of loans continued. USDA loan, no money down. It is 100% financing. However, that does not cover closing costs. So that's something to consider. But when you're working with a great realtor, they can actually negotiate closing costs, which is great. So private mortgage insurance runs the life of the loan. It is restricted. So there are homes that qualify and other homes that do not. Typically, it's in a more like rural area where the homes will qualify. And if you are interested, please go to this website and you can see if you actually qualify for the loan. Okay, so property condition, what to look out for. So for any government loans such as FHA, VA, and even the USDA, they have stricter requirements for inspections and appraisals. So for instance, peeling paint, windows, doors, sheds, garage, porches, trim basements. They look for electrical covers, exposed wires, cracked windows, holes in walls, mold. Upper level porch needs railing or door needs sealed shut, access to crawl space and attic. So it's very important that you have an inspector look at all of these things. Okay, so here is a comparison for different loan programs. It is very important that you take a look, and of course your loan officer will be able to really see what you qualify for once you do an application. So it's important that you work with a qualified lender. All right. Why buy a home? So you can deduct the interest payment and property taxes when you are paying for your taxes at the end of the year. Stable housing costs, no landlord to raise your rent, grow your equity and wealth through property appreciation. So renting versus buying, $200,000 home as an example. So $700 per month rent is approximately $900 per month mortgage. And that is with an interest rate of 3.875% and with about 3.5% down. So that's going to be an FHA loan. Okay, so 5% annual rent increase versus a minimum of 2% annual appreciation, which means that you're actually building equity in your home. After 5 years, you have spent $46,415 in rent. Net equity renting equals 0. So can you imagine $46,000 that you could have paid towards your home? Therefore, you have equity in the home. So when it comes to you selling your home, you have actually increased your wealth by $46,000. Net equity owning at a minimum of $20,000. So $20,000 is a lot of money. Are you ready to buy? Do you have a steady or stable income? Do you pay your bills on time? Do you have low to medium debt? Do you have assets for closing costs or down payment? Now, mind you, there are programs out there, again, such as the USDA loan and down payment assistance programs, where all you would actually have to worry about is your closing costs. And of course, that can be negotiated with the seller for them to cover closing costs. Why be pre-approved? So you can know what you can afford to pay for a house. It tells sellers that you are qualified. It makes it easier to work with a real estate agent. And that is all for me.
Great. Thanks, Rosa, for going through a little bit of the mortgage process with us. So now we're just gonna go ahead and talk about really quickly the process or the road to home ownership. And it starts off with about 6 easy steps that we can discuss here in detail. It's the loan pre-approval process, working with a realtor, and those two are interchangeable because if whether you come to me, uh, if you come to me first, I'm going to send you to a mortgage officer anyway. So, and then choosing your home, negotiating an offer, property inspections, and then the closing process. A few things you need to know when working with me or anyone who is a licensed realtor. We have an agent-buyer relationship. So we build trust, we trust each other, we talk, we communicate. We help determine the best loan and lender that works best for you. We provide extensive market knowledge, so you always know what's going on in the market. We negotiate terms with the seller's realtor. We coordinate all inspections, and we give first-time home buyers tips and practical uses. So first step in buying a home is finding out what's important to your family. I try to tell my clients when they're looking for a home to be specific as possible because what I'm going to pull up on my end is a huge list of homes. So you have to be specific in what you desire. So be available to view the homes once they're newly listed, because it seems like the homes you like doesn't last long. I hate to say that, but it's true. So be ready to look at a home, decide the location, neighborhood, school zone, be realistic unless you want a custom home, and we can provide custom home builders as well. Whether you want to pay a HOA or not, frame versus block, and then we make an offer. So in order to make an offer that they can't refuse, for one, you have to be ready to make a decision, which is why it's important to get pre-approved. That helps let the seller know and the seller's realtor know that you're serious about making a purchase. Excuse me. So be ready to make a decision because homes don't last long. Come up with a realistic asking price. Set the closing for as soon as possible. Typical real estate transaction takes about 30 to 45 days. It depends. So you want to close as soon as possible. Set your property inspection days, and you want to have a strong earnest money deposit. Keep your contingencies at a minimum, and be realistic when inspections are completed. And a couple common contingencies: financing, down payment assistance, title, clear and marketable. That means free and clear. There's no liens or anything on the property. And inspections. So you have building and structural, roof, electrical, and plumbing, pest and termite, well, water, and septic. And just a quick note about the down payment assistance. If you're not sure what you're available for, I actually have a link that I can send you to where you can enter the property that you're interested in into the form, and you'll be able to find out the number of programs that are available for that home. And then you fill out further information and it'll tell you what you're actually eligible for. So contact me if you're interested in that as well.
It's so helpful.
So these numbers are typical uh, typical numbers for what's listed here. They're not 100% accurate because they're always going to vary. So,
Right.
earnest money
Right.
deposit, which is typically 1 to 2% of the purchase price of the home. So typically, it's about $1,000. Depends on how expensive you're buying. Uh, Appraisal fee is usually about $500. Home inspection is $350 to $500. Loan down payment, which depends on the type of loan you have, whether VA, FHA, conventional, 0 to 5%. Closing cost is 3 to 6%. And you see that little note in the parentheses there. Beware of any lender that can tell you that they can do no closing costs, because that usually means a higher interest rate. And that means you'll pay for it more in the long run. So just beware of that. So after let's say you find a house you like and you want to put an offer on it. So 3 things can happen. It can get accepted by the seller. The seller can reject it, or he can counter offer it. So let's say there's a $100,000 home that you like and you offer 95. The seller then has a right to say, yes, I'll take that offer. No, that's a bad offer. Or he can say, no, give me 97,500 and we have a deal. So those are your 3 options that you have. And an experienced realtor will be able to handle the negotiations on your behalf and keep you in the loop at the same time so you know what's going on. So now we're going to go step by step and talk about what actually happens. So you get pre-approved, you find a house you like, and you submit an offer, and the seller says, you know what, I'm going to accept it. So then the house goes into what you call escrow. And then there's an escrow deposit that has to be made, which usually is handled by a third-party company, like a title company or a bank or something like that. So this goes to the title company that will be closing on the purchase of your home. The name, address, and the amount and contact information will be on the front page of your contract. So step 2 would be to complete the loan application. So once you get pre-approved, there will be a date that you have to use the pre-approval letter. And that'll be the date that you also have to be able to complete the loan application. So should be around on page 2, line 91, something like that. When the lender makes a request, please get it to them as soon as you can, because the longer you take to submit the required documents, the longer and more drawn out your loan process takes. So we tell people to keep a copy close by, whether on a flash drive or in your email or whatever, just so when they ask for it, you'll be ready and able to send it. Home inspections, the prices, they vary greatly. Just depends. Every company has their own formula when they determine pricing. So you definitely want a wind mitigation report. And this is basically where the inspector, he'll inspect your windows, your roof, your doors, to see exactly how much wind that they can handle. And he'll even check your roof to make sure that it's sealed good, so to see if water will seep through if there was any rain or any hard rain. So you definitely want to make sure that your inspector is certified in wind mitigation. Termite inspection is a huge must, especially if you have wood. But even in a block house, you want your termite inspection as well. and your 4-point inspection, which is typically done or typically used by insurance companies. For homes built in the 50s, 60s, and 70s and 80s, they have what you call a Federal Pacific panel, which is just the electrical box that was made in those times. So you want to get those checked to make sure that they're up to code. And yeah, that'll be good. So after that, you want to start shopping for homeowners insurance. Your insurance agent should not only give you a quote, but you should also check to see if the home is in a flood zone. Not all flood zones are created equal, and you may be surprised at the zoning that some homes have. A hurricane is covered by your hurricane insurance and required in Florida, because Florida hurricanes, they go hand in hand sometimes, even though we've been dodging them for a while lately. And it's included in your homeowner's policy. And I just want to say a little quick thing. I had a buyer who was looking at purchasing a piece of land, and we found out that the home was in a flood zone. The code was A, which is one of the worst flood zone codes you can have. That's what you call a special exception flood area. And you have flood zone code Z and flood zone code A. Z is by far the worst, and then A is right under that. So you might want to avoid those areas if you can. So moving on to step number 5, you order an appraisal. This is done by the lender. You don't get to choose. You don't get to choose who gets to appraise your home. The ball is in the lender's court because they're the ones funding it. So they get to choose. And this can take up to 2 to 3 weeks. It depends. That's normal times now because of COVID, and everything is drawn out. So don't be anxious. It takes 2 to 3 weeks. Sit tight. We'll get it done for you. After that, once all the conditions have been met by the underwriter, then the loan is approved and we can really get to moving. So the next step would be to contact your utilities, and they must be on during the inspections. However, they're typically turned off on the day of closing. And then water in most municipalities require a copy of the deed or closing statement signed by both the buyer and the seller in order to transfer the service. And I believe this is about third base. You're almost home. So there's a final walkthrough. This is normally done the day of or the day before closing, so that the seller is required to have the home in the same conditions that it was in the day you wrote the contract. This means that any damage incurred between that time and the final walkthrough are responsibility of the seller. So you've seen a house, you like it, you put an offer on it, and let's say a hurricane comes through and takes the roof off. Well, that is the responsibility of the seller because it's not in your name yet. It is still in the seller's name. So that's good news. So after the final walkthrough, you have closing day. This is where we wire the funds. We try to do this the day before closing because it typically takes a couple hours. It has to go through the Federal Reserve to get approved. And you won't be able to get your keys until the money is received. So we try to get the funds wired the day before your closing day, your set closing day, so that once we're at the closing table, we're able to just hand you the keys. You bring your photo ID, sign some closing papers, and you get the keys to your new home. And we have just a few successful home ownership keys, if you rather, that are vital to every homeowner. You want to avoid risky loans. If it sounds fishy or if it sounds too good to be true, there are 9 times out of 10 it is. So make your mortgage payments online. I meant on time. You can do them online, but make them on time. It's a lot of rhyming going on. I think I might start a rap album or something. Stay current on your property taxes. Maintain adequate insurance. Keep the home in good shape. Keep an emergency fund ready, which is something I wish I would have learned when I became a homeowner, because you just never know with the home things, and you want to keep an emergency fund regardless whether you have a home or not. You just never know when problems or situations arise where it could cut into your funds that you have to live on. So having that emergency fund always comes in handy. Avoid borrowing against the equity for consumer purchases. You don't want to take out a second mortgage or refinance your house or anything like that for a reason that you don't have to. And if you're going to do it, make sure you have a great plan in place to use those funds and to discuss how you're going to pay back those funds. So, and at the first sign of help, the first sign of trouble, get help. Please don't wait until it's too late, because I would hate for you to wait until you're at the bottom of the ocean to start screaming for help, because it'll be harder to get you out. So there are people in place, there are companies in place that can help you if you fall into some type of trouble. And the key to that is just, admitting that you need help. So if you have any questions, please feel free to reach out to me or Rosa. You can DM us on Instagram. You can message us on Facebook. You can text us, call us, email us, whatever you want to do, whatever method you can. Always reach out to us. We'll always be available to help you. Home ownership is a new wave, and we want everyone to jump on the wave and be a part of owning their own home. And real quick, I have a method that I've been working on. It's called the merge method. And it basically takes care of all those new, all the things that we listed so far that we talked about. My merge method covers that. So basically it's just meet, educate, readiness, go, and execute. And it's always tailored differently to whatever client I'm working with. If you want to know more about my merge method, please reach out to me and I can give you some more information. So thank you to Home Team Lending for allowing me to be a part of this awesome seminar. Thanks to Rosa for inviting me and giving her part on the presentation. She did a great job.
Thank you. Thank you for joining, for sure.
Yeah.
We are a great team, and we are available for our clients and whatever they need to actually get or achieve the goal of being a home owner. I mean, we're here for. So please do not hesitate to give us a call. We are available. We are ready to help you out on this journey, for sure.
Definitely. So we hope that you got something valuable out of this seminar, and we hope you guys enjoy the rest of your day.
Thank you. Goodbye.
Bye, guys.